Good morning, Mark Soderberg with ADM Investor Services with your morning ag market outlook. Mostly lower trade overnight across the ag space. However, as we get a little closer to the pause, starting to see a little green on the screen. Corn right now is within a half cent of unchanged. Same in wheat, with a little bit lower in Chicago and Kansas City, a little bit higher in Minneapolis. Lower trade across the soybean complex, still 4 to 5 lower in the beans, down $3 in a meal, while 10 to 15 points lower in the bean oil. Soybean weakness continues to stem from yesterday's surprise announcement from Argentina, where they suspended their commodity export taxes through the end of October or until they are able to generate $7 billion in export revenue. China immediately hopped on the opportunity by securing at least 10 cargoes of Argentine soybeans for fall delivery, some estimates as high as 15 cargoes. Total volume would be somewhere between 650,000 and nearly 1 million metric tons of beans. Cash sources indicate the business was done at roughly $2.25 premium over November futures. That included the cost and freight. Again, this is a time frame where U.S. soybeans typically fill the Chinese demand, and just another blow to the U.S. demand picture. The announcements prior to yesterday's announcements, Argentina's export tax on beans were 26%, 24.5% on the products, where feed grains was 9.5%. While bulls remain hopeful, President Trump's face-to-face meeting with Chinese President Yi here this fall could still result in a trade deal with China involving their purchase of U.S. ag goods. However, that window ahead of next winter's South American harvest continues to get shorter each and every day. Crop conditions after the close yesterday, in line with expectations, we saw corn ratings drop another 1% to 66% good to excellent. Conditions improved in only 4 states. They declined in 11 while holding steady in 3. Ratings have now fallen for 7 consecutive weeks. However, overall ratings do remain the highest still since 2018. Updated ratings would imply an average yield of 182.7 bushels an acre, with production at 16.454 billion bushels. That's down 54 million for the week, and now down 360 million from the USDA forecast in September. 91% of the corn crop is dented, 56% is mature. Those are both in line with recent history. Harvest at 11% matches a 5-year average, but below a year-ago pace of 13%. Bean ratings slipped 2% to 61% good to excellent. Conditions improved in 5 states, declined in 10, holding steady in 3. Overall ratings have now fallen for 4 consecutive weeks and are now below where they were at a year ago. Updated ratings, my model has a forecasted yield of 53.5. Production at 4.294 billion. That was down 18 million for the week, and just below the USDA forecast of 4.301 billion. 61% of the crop is shedding leaves. 9% of the crop has been harvested. That matches a 5-year average, but below the year-ago pace of 12%. Spring wheat harvest, for all intents and purposes, is done at 96%. Winter wheat plantings at 20% below the 5-year average and year-ago pace of 23%. So on inside trade in Dees corn overnight as it consolidates between its 50 and 100-day moving average, supports at 414.5. Rains this week in the southern Midwest and eastern Corn Belt will slow harvest activities. Dry across the northwestern third of the corn and bean belt. Warmer conditions look to hold into early part of October. Fresh 6-week low for Nove beans overnight. Not sure how much longer it can hold above that $10 level. Next major support is at August low at $9.8125. Fresh 3-month low in Ock oil. Next support there, 48 cents. 6-week low in spot meal overnight. Next support, July low at 266. We have a new contract low in D, Chicago, and Minneapolis. Inside trade for Kansas City contract. Funds, again, healthy sellers across the ag space.